Good day to everyone joining us from around the world, whether you're just waking up midway through your trading session or winding down the night, welcome. So on behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. So my name is Aidan and I'll be guiding you through this exciting 2-hour journey as your host. So today's live stream is not just a presentation, but it's a conversation, and it's a window into the engine room of one of the most fast-growing and forward-thinking funded trading firms in the industry. And of course, I am not here alone. I'm joined by two remarkable guests who are here to help shape what WeMasterTrade represent today. Skilled traders, mentors, and role models within our community. So first up, let me introduce the African host, always insightful Daisy. Welcome, Daisy.
Thank you so much, David. Hello, everyone, and thank you for spending your time with us. I'm truly looking forward to today's sessions. There's so much to cover, not just about trading strategies or rules, but about the full ecosystem that WeMasterTrade offers, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trades, it's build traders.
So absolutely, and next to her is someone who brings sharp analysis and clarity to her conversation. So she's strategic, sharp, and she's a real force in her trading space. So next up, welcome Raf.
Thank you, Aiden, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is that we are going to unpack everything, not just what WeMasterTrade offers, but how traders can truly take advantages of each part of our system, from packages to promotions to scaling and long-term profit sharing. If you have ever had questions or even doubts, today is the day to ask them.
And that's exactly what we are here for, whether you're brand new to WeMasterTrade or you're already a part of our funded trader program. So today's live stream is going to give you the full picture, not just the highlight reel. So over the course of the session, we're going to walk you through what WeMasterTrade truly is, what we believe in, and how our programs are designed, and why we're doing things differently from traditional brokerage or platforms. So I want to be clear here, so this isn't just about sales, so this is about understanding that we want you to know what you're signing up for, what kind of structure support your journeys, and how you can use that structure to not just succeed, but scale.
And speaking of structures, we will begin by sharing the story behind WeMasterTrade, how we were formed as a funding project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly, and from that developing from our flow everything we offer, especially our trading pockets, we will be discussing in details. We will explain the logic behind each one, what kind of trader they are designed for, and how the structure changes depending on whether you choose the trading models or instant funding models. So if you have ever looked at our pocket and thought which one is right for me, today we will answer that.
More than that, we'll also do a live comparison between packages. So we'll break down price zones, account size, maximum drawdowns, consistency rules, and even payout side by side to help you make a fully informed decision. So it's one thing to see number on a website, but it's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is always, how do I stay compliant while trading? So we will move naturally into discussing trading rules, which honestly is one of the most important part of today's sections. And we will explain what the daily loss limit is, how it's calculated, why it includes both closed and floating P&L, and how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency ratio, and we will even address common misunderstandings about trade sizing and risk per trade policies.
And we won't just explain rule in isolations. We will explain them in the context of live trading diseases. I will share some personal example from mistake I made when I first started trading under funded conditions and how I just adjusted because rules aren't meant to restrict you, they are there to protect in the integrity of your growth.
And while we're on the topic of having to succeed, we'll be guiding you through our current promotional plan, including limited time discount codes, trader support campaigns, bonus capital opportunities, and how to properly qualify and submit proof. So we've had some amazing responses to our promotions, but also some confusion. So we'll be showing you exactly what you need to do step by step.
And from there, we will transition to a discussion on our scale-up plan, which I personally think is one of the most underrated parts of WeMasterTrade offerings. Many people don't realize this, but we have a structured growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income as we MasterTrade is through our profit-sharing models. This is the first of what makes a difference from when you trade on funded accounts and generate profit without breaking rules. We share that profit with you up to 90%, but there's no more to it than just the percentage. We will explain the full payout cycles, threshold, and timeline today.
Now, so I want many of you watching today aren't just traders. You're also educators, influencers, or people with large networks. So that's why we're also taking time to explain our affiliate program, and we'll do it transparently. So we'll work you through how commissions are calculated and how affiliate referrals are tracked, and more importantly, what you need to qualify for payouts, including a detailed explanations of the two referee rule and minimum funding conditions.
This is especially important because we want all our traders to feel confident and clear about their earnings. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the term, and building long-term income streams.
So as you can tell, this is not just a surface level LiveStream. We're diving into everything: packages, route, promo, scale-up pads, profit sharing, and affiliate opportunity. So all with one purpose in mind, helping you make the most informed, empowered, and confident decision possible.
And we want it to be interactive, not just informative. So if you have a question at any point, please drop it in the chat. Our moderations are watching, and we will answer many questions live as we can. Your voice matters.
And if you are watching this on replay, don't worry, we will leave timestamp and summaries below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible, and they really care about having traders succeed.
And to wrap this welcome, I'd like to say this: WeMasterTrade is not just a platform, but it's a commitment to build great traders, to create fast, structured, and scalable pathways for people around the world who are serious about trading as a profession, not a game. So if you're here to grow, to understand, and to take actions, I believe that you're exactly where you need to be. So let's dive into this journey together. And let's begin. Once again, welcome to the WeMasterTrade live stream. Okay, so thank you once again for being with us today. Now, before we dive into the packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full pictures of who WeMasterTrade really is, what we believe in, and why we've built this platform the way we have. Because when you're putting your trust and your trading into a company, it's understanding its philosophy isn't just helpful, but it is essential. And so this segment is about origin, intentions, and impact, and it's about how WeMasterTrade began and what values underpin the funds and how those values translate into real tools and outcomes for traders like you. And to walk through that, I'm joined as always by two live and two lead and treat these principles, Daisy and Ralph. So let's start at the beginning.
Hence, Aiden, to truly understand WeMasterTrade, you need to understand why it was created. Unlike many platforms or brokers that evolved from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give a capable trader access to capital regardless of their background, location, or financial situation. We were filed in 2022 as part of WeCopyTrade Group, headquartered in Vancouver, Canada. While WeCopyTrade builds its name on signal sharing, investor network, and copy trading decks, WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to note that WeMasterTrade is not a broker. That's not just a label, it's a fundamental difference. We don't profit from spread or commissions. Our success is directly tied to the success of our traders. That's why everything we have built, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk, we give you the roadmap, you bring the skill. But we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow rules, we want them to understand the logic behind the structures. That's why we have invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with courses ranging from introductory trading psychology all the way to advanced risk management, the multi-asset strategy design. So the WeMasterTrade Academy isn't just about theory, it's about implementations. And we have designed the curriculum to match the real-world trading environment within WeMasterTrade so that you can, what you learn and you can apply that directly to our funding account. And to ensure that our system and content meet global standard, WeMasterTrade is proud to hold an ISO 2018 certification, which confirms that our education product and trader development program meet rigorous trading criteria for quality, structures, and learning engagement.
That certifications is a big deal because it shows our long-term commitment to develop traders, not just collecting fees. In an industry where many so-called platform come and goes, WeMasterTrade has a positions itself with real operational stabilities, compliance frameworks, and internal accountabilities. We're not here to assist. We have to build career.
And we have seen that commitment translate into real stories. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how WeMasterTrade help them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We have had students become full-time traders, we had women re-enter the finance world after career breaks, and we had young professionals from underbanked regions finally access the market with a funding account. That's the impact and that's what drives us.
And it doesn't stop that. The WeMasterTrade ecosystem is designed to grow with you. So for those who want to stay engaged and up to date, we maintain a regularly updated blog section where our team of experts and educators share weekly insights on trading psychology breakdowns, market reactions and platform updates. So we believe that learning never ends and we keep our traders informed. But let's also talk about culture, because what makes WeMasterTrade different isn't just about the product that it is offering, but it's a community mindset. So we actively promote trading integrity, respect for competition and knowledge sharing. Whether you're in the Telegram group, watching a YouTube series or engaged with us online support, you see that we're actually listening.
And I will speak honestly here. In many platforms, the trader is just a customer. But at WeMasterTrade, traders is the product. Your performance drives the business. Your voice shapes the platform, and your consistency determine how far we can scale together. That mutual accountability is rare, and it's something we are proud of.
And if you ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonial, take a look at our funding account, and connect with people who have gone through the system. The stories are real, the capital is real, and the results speak for themselves.
And to summarize, WeMasterTrade is a capital allocators, a talent accelerators, and an education-first trading institution. So we are here to challenge the status quo of trading access and to build systems that reward performance over promotions and to create real scalable incomes opportunities for traders around the world, regardless of their starting point. This is more than a platform, it's a trading movement, and if you're ready to be a part of it, today's live stream will show you everything you need to know. So thank you, Daisy and Rob, for that deep and honest breakthrough. So coming next, we are going to take those foundations and connect it directly to our actual offering. So that means we'll be discussing all the different account packages we WeMasterTrade, how they differ from each other and who they're designed for, and what kind of results you can expect from them. So now that we have explored the WeMasterTrade and principles of behind the scene, so it's time to move into one of the most essential parts of this live stream, which is an in-depth discussion of our account packages. So this is where it all begins for most traders, choosing the structures of bets aligned with their goals, their style, and their current skill level. And when we say packages, we are not just talking about dollar figures, we're talking about framework. So each package, the WeMasterTrade, represent a different pathway toward growth, and today we'll walk you through all of them, what they offer, how their structures, and most importantly, who they are designed for.
Exactly, Items. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we build two distinct product lines for traders: the challenge packets and the instant funding packets. Each line include a variety of account size and configurations because we know that traders come with different strengths, risk appetites, and timelines.
Let's begin with the challenge model, a two-phase evaluation system built for traders who want to prove their skills before being allocated capital. It structures fair and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulate account. Your goal is to meet specific profit targets while we staying within strict but reasonable risk parameter. There are 3 steps in total: phase 1, phase 2, and the funded state.
Take instant for our 10,000 challenge. A great starting point for phase 2 to minimize upfront costs while building a track record. So let's break it down phase by phase.
In phase 1, you need to achieve an 8% profit target with $800, with reaching a 5% daily drawdowns, $500, with a 10% over loss limit of $1,000. You have unlimited time to achieve this. That's a key difference from many platforms. We don't pressure you with deadline.
Once you pass phase 1, you will move to phase 2, where your profit target drops to 6%. That means $600. The risk rule remains the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, once both phases are clear, you enter the funded accounts, where you trade with real capitals, have no profit targets, and your profit share jump to 90%. That's one of the highest in the industries.
And who is the 10,000 challenge best for? This account is ideal for newer traders or experienced traders who want to start with a lower pressure and learn the system. If you are still refining your strategies or want to get a feel for WeMasterTrade risk framework before scaling, this is the perfect package to begin with.
So now for those who are confident in their strategy and want to start with a largest account size, so we offer 25,000, 50,000 and 100,000 challenge packages. So, the structures is similar, 2 phases, the same 5% daily and 10% total loss, but the profit target scale proportionally.
For examples, in the $50,000 challenge, you will need to hit $4,000 in phase 1 and $3,000 in phase 2. While the targets are higher, the levels remain the same, 1 to 100, giving you room to adjust position sizing.
The $25,000 to $100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funded accounts. If you have already passed all the profit challenges or have a strong verified trading history, this is a good step up.
So average challenge package comes with a one-time fee. So for example, just $45 for the 10,000 challenge package, and this fee is going to be refundable once you become meet the minimum performance conditions. But if things don't go your way, you're eligible for a 30% reset discount to start dash. But what happens if you don't want to go through the challenge at all, but instead want to access real capital immediately and get paid immediately on results? So that's where our instant funding packages comes into play.
And this is where WeMasterTrade truly set itself apart. Our instant funding model is designed to give experienced disciplined traders the chance to trade real capital from day one. No evaluations, no demo stages, just pure live trading backed by a structured, fair and transparent system. And what makes it even more accessible is that you can choose from several different account types depending on your style, preferences and goals. Today we are going to walk you through each of the 5 main instant funding packages: Standard, 51010, 510, 510 OBC and Customized. We will compare the details, but more importantly, we will have you figure out which package is right for you.
So let me set the scene quickly. So all of our instant funding packages give you live trading access from day one. So that means no shallow phases, no evaluations. You hit once, follow the rules, and you're trading live capital. And every account, no matter the size, includes no time limit, up to 90% profit share, balance-based drawdown, and scale plan toward $1 million. And the account also supports EA's WeTrade, scalping, and even HFT. So now let's go package by package. As we go day zero, I want you to jump in with real advice. Who should actually choose this one, and what kind of traders you've seen succeed with each?
Okay, let's start with the standard package. I always describe this one as a bad friend for a trader who just want to stabilities. You are getting up to $200,000 in capitals with a very manageable 4% daily lock limit and 6% overall daily drawdowns.
It's like that calm, steady account that doesn't push you to overtrade. And with the profit split up to 90%, the serious earning potential, even if you are taking a slow and steady approach.
And how about commissions?
Competitive across the board. Forex at $4 per lot, gold at $4 per lot, indicates at $1, and stock at just 0.075 per lot.
And everything is allowed. Nails trading, scabbing, weekend holding, EAs, HFT, you name it.
So for the audience, if you're someone who trades regularly and understands your strategy, wants a full range of assets and plans to play along the game, I believe this is your sweet spot.
It's perfect for intermediate to advanced traders who already know their edge but don't want to stress with a target-based challenge. And if you have ever had an account blow due to unrealistic rules, you will find the standard model refreshingly fair.
I also say it suits swing traders. It falls to 6% risk profile give you just enough flexibility to hold multi-day positions, especially with weekend holding fully allowed.
Alright, so moving over here. So let's now talk about the 5-10-10 package again. So same capital ceiling up to 200,000, but you get 5% daily loss and a wider 10% overall limit. So why does that matter?
That execution is massive for traders who scale into positions or take multiple entries per setup. You have got more room to breathe, especially in high volatility markets.
And the perfect target here is also 10% week align well with the red windows. Plus, you still get full support for scalping. EA's new trading is very trader friendly.
This is best for day traders, especially those trading assets like NSS or DAQ or gold that move fast. If you've got a tested entry strategy here and just need some risk breathing room, this is your package.
And also for traders who want to structure but don't mind having that perfect target, the clear milestone motivates some people, especially if they are payout or retains.
So now is a personal favorite, the 5-10-0. You get 5% daily and 10% overall lot, but no profit target, non-zero.
And that's blessing for high precision trader. You're no longer chasing a number. You should focus on protecting equities and growing capital slowly and safely.
This one is loved by low frequency traders and snippet. If you are enter 3 to 5 traders a week, this is your space. You are not penalized for patience, you are actually rewarded for it.
And veterans, swing trader, risk consistent trader, people who prioritize consistency over speed. If that you will try here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale cleanly. This is their home.
So now for the rule breakers, or rather those who don't want to be evaluated on how even the profits are, the 5-10-10 no removes profit consistency tracking, right?
Exactly, same 5 or 10 risk profile, but you are not required to keep your profit growth smooth. One big winner day is totally fine.
The search trace copier and not allowed in that one, so it's for manual traders only, and you need to trade responsibility. But for aggressive trader who sometimes hit big price, this is a place.
And it's perfect for high risk, high reward traders or anyone who's had issue with consistency rules at other firms. You trade how you want, just keep it inside the drawdown box.
And last but not least, a customized packet. So this is WeMasterTrade saying, you know what you need, so let's build it together.
You can adjust daily loss, overloss to your likings. Plus, you can fund up to $400,000 more than any other accounts.
It's premium, flexible, and comes with on-trading style allowed, including EAs, no trading, weekend holding, HLT, and more. And who is for top-tier professional at edge fund traders, signal providers, high-volume traders, anyone with a very specific structure in mind. This package lets you build it.
I always say if you have tried other models and nothing quite fit, build your own blueprints with customized. That's freedom's era.
So to sum up, every instant funding package we offer comes with clear risk parameters, fair commissions, deep market access, and real profit potential. There are no limits and payout that start as early as 1 day in.
And no matter your strategy, capping, swing, or rules or manual, there is an account that's aligned with you. The key is picking the right one now, so you can start building consistency from the start.
And if you are ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dream. The right fit always outperforms the biggest promise.
So up next, we'll walk you through how to protect your account, avoid breaches, and understand key consistency rules that power our entire platform. So now let's talk about the part that either makes or breaks your account. So this time to dig into the trading rules and how to actually stay compliant once you're funded. So because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins at. So the number of recent traders lose their account, it's come down to one thing, the daily loss limit.
Yes, the dreaded daily loss is the one rule traders think they understand until it kicks them out of their account at 3:17 p.m. on a random Tuesday.
But here's a good news. Once you understand how it works, really works, it's become one of your best tools for risk controls. So today, let's break it down from top to bottom.
So what is the daily loss limit, also called the maximum daily loss?
It's the maximum amount of lot you are allowed to impose in both floatings and closed trades on any single trading days. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction, and it's what strips a lot of people.
And let's work through a live example. So imagine at the start of day 5, your balance is 105,000, your equity upwards higher 107,000, so because of open floating profit.
If you are on 4% daily lot limits, we calculate it off the higher number, $107,000.
So for 4% of 107,000 is around $4,000. That means your equity for the rest of the day can't drop below 102,000 or boom, the account is gone.
Right, so I think it's important to point this out. The system isn't waiting for a close. It's real time, so even if your trade is floating lots and you haven't closed it yet, if your equity dip below that threshold for even a second, no, that's it.
Now let's reverse it. Say it's a stop day 7. Your balance is 100,000 but your equity is 99,000 because your open trades are slightly in loss.
Since the balance is highest, we pay the 4% on initial balance, so let's say 400,000.
So your equity must stay for 60,300 a day. If it drops to 95,999, also liquidation kicks in, no warning, no margin call.
And what happens if you break it? The system will send a market order to close on trades. Everything liquidated in your account is disabled and you can't trade again unless you purchase new package.
And here is the kickers. The auto close happens when the system detects the threshold will cross, but due to the market fluctuation, your final P&L might world dance the actual thresholds, and that's because the system executes a closures based on price slippage at the time of liquidation.
So even if you're intended to take a a 3,900 lot, once slippage, Volkswagen, Golf or Nasdaq, and certainly this 4,200, so that's why we say don't ride the edge.
Alright, let's talk about how to avoid violating this rule because this is where the pro mindset kicks in.
First step is know your buffer. Never plan trade to take you right up to the X of your limit. Leave at least 10 to 15% room below the mark loss, especially violate markets.
Tip number 2, check your equity, not just your balance. I can't stress this enough, most traders set their balance all day, but if your floating loss is dragging your equity, you are heading toward violation.
So tip 3, use a dashboard or a tracker. So inside WeMasterTrade, we provide risk dashboard that shows your live drawn out status. You use them, check them, don't rely on your memory.
Also, hold trading after a big loss early in the day. If you are lost 3% in the first hour of London sections, maybe it's time to stop and reflect. Not trying to revamp the trades your ways back up.
Another big one, trade smaller during news hours. If you are trading gold during NAP with full loss size, you are practically begging to break the die loss rule, cut position size and ride post volatility.
So what are the top rookie mistakes you see when it comes to daily loss?
Number 1 is over leveraging. Traders opening positions that are 5, 6, 7% of their account thinking they will close quickly, but if the trade turns around fast, it's already too late.
Number 2, holding overnight without checking exposures. If you hold 3 trades overnight and wake up to a 60 bip gap, the line loss could be hit before you even open your eyes.
And the third, assuming that closed trades are all that matter, they're not. Remember, equities includes both floating and closed positions, so the total equity line is your score.
I always say this is new to new traders. The daily lock rules isn't your enemy. It's your account's airbag. It's designed to protect you from doing something irreversible.
Exactly, it's positive discipline. You can be aggressive, but only within the box. And if you learn to trade inside a bond, you will last longer than 90% of the market.
And one last note, it isn't just about rules, it's about trust. So WeMasterTrade funds you because we trust that you manage risk responsibly. So the daily loss is there to protect that trust on both sides. So as we have covered the daily loss rule, we're going to enter a short break, and after that we're going to continue exploring the other trading rules.
Trade. Trade. copy trade. We copy trade. We copy trade. Copy Trade. We Copy Trade. We Copy Trade.
So welcome back, traders. So in the previous segment, we have covered the daily loss rule. And if you haven't already clicked that one, you're missing out. But now we're moving from the daily boundary to the absolute boundary. So I'm talking about the maximum loss rule, also known as your account stop loss. So the line that can't be crossed, not just for the day, but for the entire life of your account.
This is why a lot of children misunderstand how the rule works. They think, well, I didn't hit my daily limits, so I'm fine. But then a week later, they will chip away at their accounts and suddenly liquidation.
The max loss rule is the life safety net. If the daily loss is your daily segment, then max loss is your airbag. If the limit is hit, it means the account is deemed unsalvageable under your current trajectory and is closed immediately.
So what exactly is a max loss rule? Let's define it simply. Is a total maximum amount you're allowed to lose across all trades for the entire account. If your equity, that is your real-time capital, including open trades, ever drops below a certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss, which resets every day, this one doesn't reset. It's accumulative. You can lose 2% one day, 3% the next, and if your total loss cross the line, that's it.
And the percentage limits depend on your package. It's typically either 6% or 10% of your initial balance. Not your equity, not your profit, but the original number you started with.
So let's work through a concrete example. Suppose you have an instant funding account with an initial balance of 50,000 and your max loss limit is 6%, which is 3,000.
That means your equity can never go below $47,000 ever. Doesn't matter if you make $1,000 every day. The total loss from your high point back down to that threshold is what's matters.
And remember, this rule includes both closed losses and floating losses. So if you allow 2,000 in closed trade and you have another 1,200 floating rate, your equity is now at $46,800. That means the limit account closed.
So just to be clear, it's not about the net gain or lots of caught trades. It's about where your equity stands in real time relative to that stop loss floor.
Here's where it's interesting and a little tricky. Let's say your account grew to $51,000. Congrats, you are in profit.
But your max loss limit is still based on your original 50,000 starting balance. So if your limit is 6%, the threshold is still 47,000. What changes is how much room you have to fund before you hit it.
Exactly, and now you have 4,000 in total buffer because 51,000 minus 47,000 equals 4,000. So your profits give you cushion, but the floor never moves.
And once your equity drops below the maximum loss threshold, even by a few dollars, auto liquidation triggers. On trades are closed immediately at market rise.
And again, with the daily loss, if there are no volatilities or slippers, your accounts might close out below the line. That's just execution from reality.
And most importantly, when it's breached, that account is permanently disabled. You need to purchase a new package if you want to continue trading. No resets, no rollbacks.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, track your total close loss every day. You always know how close you want to max block floor. Don't wait for that small warning. Calculate manually.
Secondly, use your profit as protection, not permissions. Don't treat floating profit as a green light to increase risk. Instead, consider locking gains by reducing loss size when you are ahead.
Third, manage your floating drawdown aggressively. Even if you're positive overall, a single trade with poor stop placement can take you from safe to shut down in a few minutes.
Fourth, stay cool when you are close. If you are down 5% out of your 6% limits, that's not the time to double down. That's the time to step away, pause, and retain your returns.
The biggest mistake, underestimating floating drawdown. Traders close 3 closers and think, okay, I still got room, but they forget about the 4 trade floating minus 1800.
Second, traders who chase recoveries after a bad day. They lose 4% in one day, come back swinging, and the next day thinking they will make it back, and instead another 2% boom violation.
Third, and this one hurts, ignoring sleep pay during major news. Even with high stop, new candles can gap you straight through your limit.
And the market loss rules is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful traders see their stop loss, whether personal or institutional. That's a non-negotiable boundaries.
Right, it's a reality check. If you're consistently brushing up against your max loss, the problem isn't the rule, the problem is your system or your psychology.
So at WeMasterTrade, we're not just giving capital, we're teaching structure, and the amount loss route is what separates gamblers from professionals. So remember, your mat loss is a percentage of your starting balance, typically 6 or 10%. It is calculated using equity, not balance, and it includes both close and floating closes. Once reach your account, it's gone. So coming up next, we are going to explore the consistency rules and why steady profit matters more than big spy when it comes to growing, scaling, and getting paid.
If you have ever made $5,000 in one day, then made 200 the next 4 days, and wonder why your payout got flat, this next segment is for you.
Let's dive into the reason of profitabilities and how to stay consistent under WeMasterTrade's model.
So, alright trader, we have talked about the daily list limit and we've just covered the maximum loss rule, 2 pillars protecting your capital, but now it's time to shift gears just a little and talk not about risk, but about results. Because here's the thing, it's not just about staying alive in the game. Every master trade we want to see trader grow, scale, and can actually earn. So, and to do that, you need more than just a winning day. You need something called profit consistency.
This is the rule right here, the profit consistency rules are what separates a lucky spy from a reliable trader. It's tell us whether you can make money over time or you are just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawal, profit sharing, and even scale up. So if you're funded and you are wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profit, the lower your ratio. So less consistent, meaning you have one giant profit day and then smaller or losing day, the higher your ratio.
The idea is simple. If 80% of your total profits come from one day, that's not consistency, that's luck or risk. That's what we want to see in traders who make profits day after day. Even if it's more, that's what we can scale.
How is it calculated? The formula is really straightforward. Take your best trading day's profit and divide it by your overall profit since you started the account, then multiply by 100.
So the best day divided by the total profit and multiply 100, it's equal your profit consistency ratio.
just to be clear, best day refer to your highest total profits in a single calendar days, and total profits is the sum of your close profits minus any close losses or open losses across life of the accounts.
So for some example, let's say you had the following result over 5 trading days, 100 in day 1, 200 in day 2, in day 3 is in minus 50, 100 in day 4, and $60 in day 5.
That means your total net profits across 5 days is 100 plus 200 minus 50 plus 100 plus 60 equal $410.
And your best day was day 2, that's $200 in profit.
So now we apply the formula 200 divided by 410 equal to 0.4878. Multiply that by 100, you get a profit consistency ratio of 48.78%.
Now, let's say your account requires 20% profit consistency, which is common. Each traders is aware about that, so they wouldn't qualify for account yet.
So even though this trader is profitable, if they're not consistent enough, they have one big day that made up almost half of the total profit, that's not sustainable, and that's what we're looking at.
And this is why I really want to speak to traders. If you are relying on one or two big days to carry your entire accounts, that's not a professional trading. That's what are volatilities. You can get lucky, but you won't stay profitable.
And remember, it's not just about your payout this week. WeMasterTrade evaluate your consistency over time. Traders who show long-term balance are the ones who get scale up, who get features, who get trusted with more capital.
Alright, so let's address the number. What's the acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. So how to improve your consistency? Let's say you over the limits, don't panic, you are not disqualified. You just need to keep trading and even out the curve.
Here to how to do that. 1. Trade smaller size for a few days. 2. Take smaller control wins and for $200 $300 days. 3. Avoid big swing trade that could spike your retail gains, and the last one is spread profits across multiple days, not one master setup.
So for those who are using EA's monetary equity curve, if your EA is screwing profits heavily into one day, you might need to rebalance it. The bot might be profitable, but it won't pass this route unless it's configured with payout logic in mind.
So let's talk about some common mistakes to avoid. Mistake number 1, traders setting target early, then taking the rest of the week off. That inflates your best day and it leaves the rest of your curve flat.
Mistake number 2 is overtrading after a big day, thinking I'm safe now, and trying to squeeze more instead of avoiding our high grade trade.
So the missing number 3 in this route is just a hurdle. No, it's not. It's a reflection of what we actually look for in our master traders.
Let's talk about why it's rule matters. At the end of the day, this isn't about controlling use. It's about building habits that can handle scale. If you cannot be consistent with the $25,000, what's happened when we give you $100,000?
Exactly. Consistency is what makes you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you are serious about long-term trading.
And we've seen it time and time again, the trader who respects this rule, they're the one who get multiple payouts, referrals, and grew into 6-figure funding accounts.
So don't feel the rule, understand it, use it as a feedback tool. If your ratio is too high, great, that means you got profit. Now keep going, balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculate out your profit consistency ratio automatically. You can check this anytime under your static tab.
So to recap this rule, it's about balance, not volume. So you need to aim to keep your best day under 20% of your total profit. Spread your wins across multiple sessions and monitor your progress in the dashboard. So next up, we are going to work you through the risk consistency rule, which is, perhaps the most overlooked rule of all. So, the risk consistency rules, or what we call is the discipline test.
That's right, trader often thinks the biggest enemy is in the market, but truthfully is inconsistency, especially in how much you are risking from one trade to the next. And this rule doesn't look at how often you win, it's look at how stable your risk is and how professionally you are managing your position sizing. And if you are serious about scaling at WeMasterTrade, this rule is non-negotiable.
So let's break it down. At its core, the risk consistency rule is simple. You're not allowed to lose more than 2% of your initial account balance on any single trade idea.
And that includes all losses associated with that trade idea, both closed losses and floating losses, even fees, commission, and swap are counted. And for some accounts, like the 510 OBC package, this rule gets even stricter. There the limit is 1% per trade idea, not 2%.
Because consistency isn't just about the outcome, but it's about the process. So the more erratic your position sizing is, the more volatile your equity curve becomes. That's what makes it hard to scale.
What this rule protects both you and the firm. It helps preserve capital, prevent large equity swings, and make sure your edge plays out over time. Think of it as your account's heartbeat. If your position size persists up and down, 0.5 loss one day, 5 loss the next, the system flags. That's not structure, that's chaos.
So this is where it gets technical, but stay with us. So the same trade idea isn't just one order, it's a group of trades that are share the same logic.
If you open 3 buy position on is AU USD gold at different time and you close them within 3 minutes of each, that's one trade idea. Because it's the same symbol, same direction and close around the same time, even if you open them at different time, they are seen as a single unified position from a risk perspective.
So the system doesn't look at your trades in isolation, it groups them into logical bundles, apply the 2% rules across the entire bundle.
You can have multiple separate trade ideas as long as each one respects the risk limit. For example, if you go long on gold, short on GBP, GBY, and short on AUD USD, and each position has its own distinct direction and asset, those are 3 separate trade ideas, and each one can risk up to 2%.
Okay, so thank you for such analysis of the risk consistency rules. So next up we are going to have a deep dive into the analysis of today's economic calendar.
Hey everyone, welcome back to our daily market briefings. Today is Tuesday, June, and we got another action packed calendar to break down. Look at those high impact events.
Absolutely, inflation number, job data, central bankers talking, and of course, Powell speech. It's one of those days where anything can move the market. First of all, the 12 a.m. ABC member Chris speak and Fed Chair Powell speak.
Starting days with a bank's Powell is speaking rise at midnight. Get your coffee ready if you're trading USD pair.
When Powell talks, the market listens, especially if he hints at inflation concern of future rate path. This can shape up equities, bond, and forex alike.
And New Zealand trade index dropped again, minus 3.4%, worse than the previous, is minus 4.2%, but better than minus 4.8% forecast.
Still contraction but slowing down. This can influence RBNZ expectation mildly, especially if commodity demand stays soft. And at 6:50 a.m. CBY monetary pace, our rotten data points for Japan, not a market mover on its own unless there's a sharp deviation.
At 8:30 a.m., Australia data triple combos AUD's monetary policy meeting minutes, company operating profits, and current account yields. That offsets current account deficits widened to minus 40.7 Bs versus minus 12.4 Bs priors, and profit dropped to.
This paints a weaker picture of Q1 for Australia. Traders may reduce policy AUD bets unless the RBA turns hawkish later.
At 8:45 a.m., China Caixin Manufacturing PMI and actual 48.3 versus 15.7 forecast. China Caixin PMI disappointed, minus 48.3, falling into contraction.
Below 50 equal to contractions. This could weigh on Asian markets and AUD New Zealand dollar pairs due to close trade ties. And as 10:05 a.m., RBA assists government hunters big and TBY 10-year bond auctions. Most central bank on callers here, no surprising moves, but market reports turn for policy direction.
At 1:30 p.m., CHF CPI actual is 0.1%, forecast 0.0%. Switzerland beats expectations. CPI came in as 0.1 above zeros.
Still low inflation but enough to keep the S&P watchful. It's at my CHF support in the short term. And as 1:45 p.m. Euro-French government budget balance and 2 p.m. Spanish unemployment change. Big improvement from Spain, fewer unemployment people than last month, put less support to the euro if confirmed by broader data.
At 2:50 p.m., BOGOV speaks. Eyes on UEDAs. If he hints at ending negative rates again, the yens might finally get some strength.
At 3 p.m. Euro-Italian unemployment. Steady progress in Italy, slightly up from 6% but not a red flag yet. At 4 p.m. Euro inflation trial, core CPI flash estimate 2.4% versus 2.7%, CPI flash estimate 2% versus 2.2%, and unemployment rate 6.2%, which is unchanged.
Inflation is cooling down in Europe. Both CPI and core CPI came in under forecast.
That could dampen ECB hawkish turn. Watch Euro USD for possible weakness if the market shifts to rate cut belt. And at 4:15 p.m. GBP monetary policy report hearings, traders will look for any subtle shift in turn from BOE inflation sticky in the UK, so any comment is impactful.
At 9 p.m. USD GOLT at sharp opening forecast is 7.19 million and previous is 8.49 million. That's a big drop in sharp openings, 7.11 million, down from 8.49 million last month.
This may signal labor market softening, which the Fed watches closely could rate high fears.
At 9 p.m. factory orders, actuals in minus 3.1% and forecasts in 4.3%, while factory order plans way below expectations.
Definitely bearish, this could weigh on USD and reinforce recession concerns if this trend continues. Next is the tentative news, RCB-TF economic optimism, still below 50, equal to pessimism but improving.
At 11:15 p.m., a GOV box in Justin's speak CHF and at 11:55 p.m. FOMC memo Goosely speaks USD. Lex 9 central banker double futures. Goose be mine equals a pull-off tones or not. So, Raps, what are your top 3 events today?
Well, in my opinion, first is the power speech with its early firework. Next is US jobs plus factory orders, which is critical for labor and manufacturing outlook. The last one is Eurozone CPI prints, which shaping ECB expectation.
Awesome. Remember traders, set your alerts, protect your capital and don't get caught in fake breaks out.
And catch you in the chat, everyone. And that is the last for our calendar.
So thank you, Rav and Daisy, for just a deep full analysis, and thank you all to our audience for joining us today. We hope that this session has been informative and that you are as excited about the opportunity at WeMasterTrade as we are. So remember to like, subscribe, and share the live stream with others who might be benefit from it. And don't forget to follow us on our social media platforms for more updates, promotions, and trading tips. Stay tuned for our upcoming events, and we look forward to seeing you again next time. Until next time, happy trading.